And welcome. This is Mary Ellen McGonagle with your Friday MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. So a rather interesting week, to say the least, a shocking end to a turning bullish type of market environment. But let's go ahead and drill down and take a look behind the scenes and really get a good sense of where we are in the broader markets. Again, always with an eye toward helping prepare you, setting things up not only for next week, but beyond. Our agenda today, as always, we are going to take a really good look at the current markets. Where are we? And then underneath those markets, where are we seeing relative strength? We want to play that strength as opposed to where weakness is starting to potentially pop up. There are some bright spots in this, what I would call difficult market. Volatility is picking up quite a bit, a lot of response to various headline news. And but again, there are some consistent bright spots that we're going to go ahead and key in on. Breakouts this week, quite a few, and either breakouts or close to breakouts. I'm talking about stocks emerging out of sound bases. What to watch for going forward, I'm going to share with you failed breakouts from the past several weeks, so you'll know the difference, as well as breakouts that have worked over the last few weeks. Again, all with an eye toward preparing you so that you know what to be on the lookout as to whether these breakouts will in fact take hold as their uptrends coming out of those breakouts. We're also going to look at some of the top sectors. There were two in particular that were up quite a bit more, certainly than the broader markets and than their peers. And I've gone ahead and screened for some of the top sectors in those areas that outperformed. And then, of course, a close look at the broader markets. I did mention, of course, as always, we are going to go ahead and do that. Let's begin. We are going to take a very close look here. This is the S&P 500. I like to start out with this daily view, and it's with an eye toward the price relative to these simple moving averages. This green line, shorter term, is your 10-day simple moving average. Pink is 21-day, and then the 50-day simple moving average. Ideally, we do want the indexes to be trading above. Certainly all of these simple moving averages would be ideal. That 50-day moving average is the most widely watched. Institutions certainly do pay attention to it. We can see with today's in the S&P down about 1%, that the index closed just below that 50-day simple moving average. I'm going to go ahead and pull up the stochastics here, because that is a faster moving momentum indicator that I tend to use when looking at broader market indices. And we can see that while the RSI just dipped below that net neutral 50, little bit into negative territory, the stochastics are positive when they trade up above this net neutral here. 50, we can see that it is in an upward trending. So mixed signals, but generally kind of a lackadaisical type of action, not decidedly positive or decidedly negative. And we can take a quick look at the weekly. The S&P 500 was up about 1.5% for the week. This is your 10-week simple moving average. I just wanted to point out you can also use the MACD as a momentum indicator, and it is potentially crossing below. At this point in time on the weekly, we're fine, but generally speaking, when we get that MACD, this is a momentum indicator, the black line down through the wet red on a weekly, it can be certainly unnerving. It has preceded the bear in 2018, the bear in March, but then we've had these little head fakes along the way as well. But just wanted to go ahead and point that dynamic out to you. Let's take a quick look at the Nasdaq, our leading tech-heavy Nasdaq, and it did manage to close the week just at its 50-day simple moving average. RSI dipped a bit on today's action, down over 2% on the Nasdaq, but we did close above neutral so it is still positive. And then I'm going to go ahead and change the stochastics, and I will tell you on this daily with the Nasdaq, the stochastics are also in positive territory. I'm pointing out this volume because earlier in the week, we were seeing the Nasdaq break back above, in this case, it's 50, and then back above this 21-day simple moving average. The fact that it did occur on volume was a characteristic. Those that subscribe to my MEM Edge report, you'll know that that was a characteristic among others that were going to would point you toward a positive bias in the broader markets. I'm going to cover that in great detail in this weekend's report as far as the markets, where they are and what to look out for. But for now, we are generally positive on that Nasdaq near term. Let's go ahead and drill down. We want to take a look at the sectors underlying the broader markets. This is a candle glance view. It's the 2-month daily price chart of not only the S&P 500, but also those underlying 11 sectors. I've gone ahead, added that RSI, and sorted it descending. We want to see where that relative strength is up here on this upper left quartile relative to the weaker areas near term. So we can see up here in the forefront two very defensive areas, utilities and real estate. Real estate was the top performer. Of course, a lot of these are REIT stocks. It was up 5.2%. Just bears a quick peek here. We can see it did turn positive again. I'm going to share with you a number of really compelling, rather interesting stocks in that REIT area, names I'm very familiar with, that are the few that are constructive, that look to be potential candidates. And from there we can see this is XLY, consumer discretionary. In our next view, I will share with you what area, why discretionary is showing up strongly here, even though it was up 3% for the week, so double the S&P 500. And then from there, we have other various groups. XLI is up here in the forefront. It really only traded in par with the S&P, but of note is this XLC. This is your communication services. A lot of internet-related names, Facebook and Google are big weightings here. Google was actually down a bit for the week. So not what you want to see, because internet-related stocks were certainly clear leadership names up here in the forefront, and it is languishing just a bit here. Again, actually Google was up 1.2%. I do take that back, but it is a little bit behind some of those other FANG stocks, but there are some bright spots. That's one of the areas internet-related that we are going to go ahead and take a look at. Let's drill down a bit further. I talked about looking at some of the underlying industry groups behind these sectors. So in addition to having each of the major broader market indices represented, I also have semiconductors, software, transports, small cap stocks, bank stocks, and retail. So again, RSI descending. I'm going to update that yet again. Take a look at the leading group here. It is retail. This is XRT, a big contribution to consumer discretionary. Of course, there is one other area that we are going to look at in consumer discretionary that is really doing quite well. And you may already know housing stocks. We're going to get into that as well. But let's take a look here and drill down. XRT is an S&P, all sort of equal weighted retail ETF. And we can see it's really emerging nicely back above these simple moving averages. RSI is positive. MACD just poised to turn positive. Most of these underlying stocks in this ETF are internet related as far as their sales, and we are going to get into some of the better looking stocks in XRT. Let's go ahead back to these underlying areas so we can again take a look. IGV is software and SOXX is semi, two formerly leading areas going into the beginning of September, and they are residing here. They are bullish. It's just not with any type of emphasis. That IGV is the higher growth software ETF, and then SOXX. I want to make this chart a little bit bigger here. on the semis, and we can see that it had a very strong start to the week, down 3% today, but a lot of bullishness there too. Hopefully we can get to all these names that are looking quite compelling. Let's go back to that industry group peak and take a look, get a better feel for where the weakness may be. Another big performer this week, and it has everything to do with really how much they fell last week, KRE. This is the regional banking ETF. And this ETF was up 7% this week. A couple of areas, names that we are going to look at there, and I'll share with you the relevance of why those particular banking stocks are outperforming. So let's go ahead from here. I'm just going to take a very brief break. When we get back, we're going to look at those breakouts as well as lots of other areas such as REITs and financials. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. We are going to go ahead and drill down and take a look at some of these stocks that were able to withstand a bumpy market this week, and they did experience breakouts. I'm going to start with Beyond Meat, BYND, and then from there, I'm going to, as we get into these areas, you will see themes emerge as far as particular areas that are experiencing breakouts or close to breakouts. In other words, they're behaving in bullish fashion. So Beyond Meat, we can see it peaked in price back here at the beginning or the end of June, and it had a very nice broad-based consolidation period. And this week, we are breaking out of that nice 4-month base. Big volume. The company has several announcements that they came out with this week. Of course, for those not familiar, they do have a plant-based alternative meat product that is being met with demand. The big news is they signed an extended contract with Walmart. They'll be providing 3 times their former order, and that was huge news. They're also expanding in the UK, and they're also expanding their product line to breakfast sausages. So 3 nice news that is going to really help push their bottom line and their revenues. We can see the RSI is positive, and in this case, the stochastics up here in positive territory. I'm going to go ahead and change that to the moving average convergence divergence because we are going to be looking at individual stocks, and I find that to be more helpful. It's a bit slower in its movement and more telling as far as the potential upside. So MACD up here in positive territory. Now let's go ahead and take a look. We're getting now into some of the themes that are emerging, but one common theme among each of these stocks that is breaking out is they've had positive news, and that's what you want to see. You want to see a driver that is going to push this stock not only out of a base, but potentially push that stock higher. Take a look at the volume. This is Twilio, TWLO. The company is a software platform that provides digital engagement for clients. They work with Shopify, Marks and Spencer, and other quite large firms. And what happened is management came out. They guided today not only higher for the 3rd quarter, but also over the next 4 years. Very big news, big gap up on volume. Stocks breaks out of this nice 1-month base. RSI is positive. MACD just turning into positive territory on today's action. So this is actually quite bullish for the stock. It's up 13%, but I'm going to share with you names that have done that and have gone on to greater heights. Another software stock that is breaking out this week is Datadog, DDOG, and we can see, take a look at this big volume on this nice 1 month base breakout. Actually, we can go back to July and we can highlight a 3-month base breakout, which is even more bullish. The longer the base that your stock breaks out of, historically, the longer your advance out of that base. Also bullish today is the fact that Datadog really was flat on the day, despite a very difficult market in software and elsewhere. This big volume is very constructive. The news here is they signed a partnership with Microsoft. So our MACD, RSI, both positive. Let's go ahead and move on to another theme. I did fail to show you that news item for this week. I'm just going to take a very quick second and share that with you. Again, this is to help provide framework for what is working and what you can anticipate going forward. Of course, the big news this week, Trump and First Lady Melania Trump did contract COVID, and this is very big news. Glad I kind of came back to this because I did want to share with you. I did go ahead and take a look at Prime Minister in the UK when he contracted in the beginning of March. Actually, February, he contracted COVID-19. And similar to what's happening now, the news out of the White House is rather cheerful that Trump is only experiencing cold-like symptoms. This is very similar to Prime Minister Boris in the UK. In the beginning, it was quite positive, but eventually it did take over a month. He was hospitalized and near death before recovering. So just always like to look at historical precedent of other major countries to get a feel for what may or may not happen. Surprisingly, the UK market did hold in despite the seriousness of the threat to the Prime Minister. Second, stimulus bill talks, they may be stalling. The beginning of the week, it was looking constructive. As we wind down the week, contentiousness remains. So you want to be aware of that. Unemployment did decline today, down to 7.9%. It formerly was 8.7. However, we did get unemployment claims that increased a bit. So a bit mixed, but generally bullish on the unemployment report today. Private companies earlier in the week added quite a bit more in the way of jobs, and then consumer sentiment for September was revised higher. I would argue that the backdrop data-wise for the economy is generally constructive. Of course, this COVID-19 with President Trump is trumping the other bullish potential news, and of course, we do want to see the stimulus bill take more shape. Okay, let's move on because we do want to talk more again about these themes in areas where stocks are breaking out. And I'm going to take us now to housing stocks. This is Pulte Group, PHM, and we can see that the stock this week is poised to break out of this nice 6-week base up at about 50 would be very constructive. Your RSI is positive, MACD having that nice positive crossover. I'm going to share with you a couple of other stocks in housing that are having nice explosive weeks. This is LGIH, a smaller regional home builder, and we can see that the stock is breaking out of this nice 2-month base. Nice pickup here in volume, and we can see that the RSI and MACD just turning positive. So this is a very constructive base breakout today at that 125 level. Does appear poised for more upside. DHI, another regional home builder, and we can see it's another one. It's coming out of this nice 5-week base breakout here at 77. RSI, MACD is constructive. And then moving on, I'm going to talk here about related stocks that are provide products to the housing market. And this is HDS, and it is a supplier of housing, home building products. And we can see this gap up here on earnings in mid-August. The stock since then has really consolidated. It is poised up here at 43 if we're able to break above that with a positive RSI, because we're getting that nice MACD crossover, black line up through the red. That is a momentum signal. Oftentimes when stocks have this period of consolidation, in this case a pullback to this upward trending 50-day simple moving average, you'll see that MACD just trend right here to that net neutral. What you are on the prowl for is that nice crossover in line with a breakout. We had that experience back here in July prior to this nice advance. So that's HDS. Another housing related, this is a company that provides one product and one product only, but obviously they're doing it well. This is Door, D-O-O-R, as the name implies, a door provider, but it did have this nice breakout this week. This is a 5-week, 6-week breakout, and it did have this breakout here at that 97 level. Take a look at the volume. That's what you want to see when a stock breaks out of a base. RSI is positive, and also similar. We had that consolidation phase, nice breakout with that MACD crossover. That is what you want to see. Very constructive action here, so looks quite constructive. I think I do have time for one more in that space. I just don't want to miss out. So much to share with you today. BLD is another, it's called Top Build. It provides building materials, and it has this nice flat base here for about 2 months. The stock this week did break out. Hard to see, but it did get a nice little pickup here on the volume. MACD had that nice positive crossover, black line up through the red with a positive RSI. So that's another interesting looking stock. Let's go ahead and move on to other thematic areas as far as breakouts. Actually, you know what I want to do is move on and share with you stocks that did break out, but they failed. And I'm going to share with you some of the characteristics to look out for when a base breakout does not take hold. This is CRSP CRISPR Therapeutics, biotech stock, had this nice base breakout here on volume. So really, you would not have been wrong to be attracted to that, to think that this nice 2-month base breakout on volume RSI was positive. But a couple of factors that I did want to share with you. One is we did not, this MACD was in a downtrend. Of course, during this consolidation phase, we didn't get a real true crossover. But more importantly, from my work, is this subsequent break down on that following day. This is all earnings related. The company did come out with decent numbers. However, when you looked closer at their earnings back here at the end of July, their losses were wider than anticipated. And also, in addition, biotech stocks overall, you want to look at the group. The group was faltering. So a couple of factors in play here, but most important when looking at the chart is this immediate break. Base breakouts tend to fail quickly, and they do so on volume. So we can see this pickup here on volume as the stock broke down. Here again, when we broke down below this 50-day, this is that early September break. Take a look at the volume characteristics again, very high. Oftentimes that points to institutions want out, distribution further downside, and the stock was down yet again about 4.5%. We did get this negative breakdown below on that RSI, and then once this MACD got down into negative territory, certainly for my work, this break below the 50 would have had you out. But as it relates to failed breakouts, the volume, and again, it will most likely occur quickly. Let's look at another one, also earnings related, Stitch Fix, SF. Oh, I need to go up over to here. SFIX is the ticker. They've been in the news quite a bit, but this is another stock that had a very nice multi-month base breakout, and then even a shorter term flat base breakout, huge volume. And again, initially you would be quite interested and excited about that base breakout, but again, the failure did take place very quickly. Big volume. The volume on that down day subsequent to that earnings report was higher than the prior day, and that is clear-cut distribution. So we can see that the stock did fall even further. It may be recovering, but when I see these breaks with wedges up, it's called a hemorrhage with a wedge. About 80% of the time you will see another break down to the downside. A couple of news items. Amazon, it came out this week with a buy and try menswear line, $5 a month for those of you that are interested. So that's a look at some that failed. Let's take a look at some that were just simply pullbacks, and you could have stayed with it. And that is, this is a stock I'm not familiar with, but QRTEA is the name. We had this nice base breakout on volume, and it really just pulled back to that upward trending 10-day simple moving average. Nothing to be concerned about, and then a base breakout that worked. This is BA and D, again, earnings related. We had this base breakout, and it just continued to carry on higher. Volume characteristics on your up days are higher than your down days, indicating that the stock is under clear-cut accumulation. So quite constructive there. CRL, one last one. This is a name that did work, and we can see that it is continuing upward. This is your initial base breakout. The stock pulled back to its 50-day, but what you want to key in on there is take a look at how light the volume was on that pullback. So you should be feel good about staying with the stock, and then it has since advanced beyond that. So that's the base breakout series, and you can see some themes emerging there that I did want to go ahead and share with you. I also now want to move on and look at some of these REIT stocks. I don't have a lot of time left, but they definitely bear taking a look at. We have some nice high yielders here. PLD, e-commerce, logistics facilities, all about retail fulfillment. We can see this nice downtrend reversal here. Volume, MACD turned positive, 2.3% yielder. CCI, all about cell towers and fiber optics, again, reversing this downtrend, 2.9% yielder, MACD turning positive. PSA, I wrote an article about this, public storage, people moving back perhaps with their families, need to store their goods, and we can see it had this nice base breakout this week, 3.5% yielder. EXR is also in that same storage space area. Had a nice day today, up 3%. Nice, poised to break out of about a 2-week base. This stock yields 3.3%. And then in the housing area, a couple of other potential candidates, a little bit sloppy looking here. I wouldn't run into this space wholeheartedly, but the volume on these downtrend reversals are what caught my eye. Sun Community, one of the largest senior housing companies, and then VTR is another one. SUI yields 2.1. VTR yields 4.1%, and we can see it had this pullback. This week breaks back up into positive territory with a positive RSI and a positive MACD. Another area that I mentioned to you is financials, and I certainly did want to share with you another theme as it relates to housing, because some of these are going to be mortgage-related stocks that are in confirmed uptrends. PennyMac, PFSI, 1% yielder, nice uptrend, finding support at those upward trending simple moving average. TREE is Lending Tree, not quite bullish yet. I'm going to want to need to see that break back above that 50-day, but certainly worth keeping on your radar. It's been able to have extensive moves here, not only housing, but also car loans, and the car industry has been very strong. OMF is Main Holdings. This is a smaller bank, had a nice base breakout this week. They do personal loans that are secured by autos and other collateral. 4% yielder. We can see the RSI MACD is constructive here. One other area that I did want to share with you that also is providing loans. Car sales have been super explosive, primarily used car vehicles. This is ALLY, Ally Financial. Had a nice 2-week base breakout today, 3% yielder. Analysts are looking for 140% earnings growth next year for that particular company. And then XRT Retail, I'm just going to share one name here, and that is CB&A, secondary used car dealer. And you can see that they had this nice, they're poised to break out of this longer term bank base. Management expects record third quarter and beyond. I'm going to leave it at that. For those of you, go ahead and try on my MEM Edge report. There's a link below. You'll be provided with really insightful information on the broader markets as well as select stocks and sectors. Have a great weekend, everyone, and I'll see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.